All right, everybody. Stocks by the numbers. Welcome back. We're looking at Centrus Energy Corporation as per request, ticker symbol LEU, listed here on the ARCA. And as we see, the stock closed 39.47 a share, up 87 cents, about 2.25% here on the day. And this is a company that does low enriched uranium, so that would be an easy symbol to remember. And right here we have a market cap of sub 650 million. We're trading about 7 times earnings. The company's earning over $5 a share. Look at that beta as well. The beta, again, the volatility of a stock in relation to the overall volatility of the market. And we can see it is technically slightly less volatile than the market itself, but EPS has been more steady than not. This company seems to be very hot and very not. Because even if we go back and we look at some of the earnings, we have big revenue and then we have some light revenue and then they come back and they have a nice big quarter and they beat. So we are kind of bouncing around. So staying in this big symmetrical triangle, it looks like, in my opinion, going back to the tail end of 21, kind of seems justified. However, we do have more potential, I think, to break up as opposed to break down, and I'll explain myself. And as you see, 3 of the 4 last quarters beating on the EPS side. Really nice profitability there. 2 of the last 3 quarters. Next quarter, early November, looking for about 22 cents a share on revenue of a touch over 56 million. If we look at this last quarter, we can see they beat by over 100 million on revenue. EPS came in very, very nice, above estimates. But if we go the quarter before, we can see the exact opposite, right? We had a big miss on the EPS side, posting a loss. They were supposed to bring in about 60 cents a share. Revenue comes in sub 44 million, estimates almost 77 million. Then look at the quarter before, right? Really big beat on the EPS side, nice beat, almost 50% on the revenue side. So we're very hot, we're very not. But in the numbers, technically, the company seems to be growing and kind of holding this value. And I know that people were also speculating. They were saying that supposedly the Department of Energy wanted to invest, I think it was about 2 billion in change here domestically for low enriched uranium so that we would have to rely a little less on Russia. I believe they said about 12% of our supply comes from Russia. So of course, a smaller cap company like this would be fighting and vying for that funding coming from the taxpayers here from the DoE. But of course, we know that anything can happen. But I will say they may be positioned well to actually receive a chunk of this funding, which of course would be a big positive catalyst and would potentially pop them up out of this symmetrical triangle. Now, next earnings, again, first week of November, which is kind of near the apex. Technically, it's right after the ball drops for 2025. So we can potentially stay in this range, but I know they were saying that, the Biden administration was going to try to push this bill through. So it may actually come to fruition before Trump potentially wins in November, right? Inauguration is January, I believe. And if you note, that's actually right near the apex. So in my opinion, in the numbers, we could stay in this range or maybe even run halfway back up. As you see, maybe this fib level looking like about 45 and a quarter, right around there, which technically would be a pretty decent move from this level here, right? We're talking about a 6-point move here at a $39 stock. But if we get back to the top of the range, you're looking at about 49. But long term, I do like it. But if we look here at the revenue, we can see 209 million, 247 million, up to almost 300 million, slight dip down to 293 million, back up above 320 million to close out 2023, with the net margin percentage staying up nicely, got up above 46%, took a dip, but it's still sitting above 26%, which is pretty healthy profits in my opinion. And quarterly, we can see again, you see a big pop here, almost 100 million, revenue dips down to about half that, big run up to 100 plus million, revenue drops down sub 50 million, and then boom, big run up here, almost 200 million. So very, very hit and miss. And obviously based off of these trends, we could potentially say that revenue is going to dip back down, which is probably why estimates are down here at 56 million as opposed to 80, 90, 120 million. But we have to take it kind of quarter by quarter. But overall, I personally do think that this company is undervalued. And I wanted to look at the numbers real quick. So as you see, low enriched uranium really started to make a nice bump here in the last year or two. We do have some business overseas. Looks like it started to dwindle though, as you see. Revenue dropped here from 22 to 23 for Japan, overseas in Belgium, but we can see domestically here in the States, that's really where the bread and butter of the revenue is coming from. If we look here, no, let's come down here. Look at the debt here, 172 million, 170, 177, 170, 171. So it's basically been holding that 170 range for about the last 5 quarters. In my opinion, not really a red flag. Free cash flow this time last year, 24.5 million. Now it's at 6.1 million. And that's probably because of the pops and the drops. In my opinion, as you see, free cash flow goes negative, then it goes back positive. So not necessarily a main metric I would look at, but you know, I use basically the same formula to look at most of these stocks. But the cash, though, you can see this time last year, 212.5 mil, and now we're up to 257 million. And we had a dip down in cash here, 183, and then back up to above 200, 228, now 257. So the cash seems to be holding steady, slowly climbing, and the debt seems to be kind of held in check here, even through these hot and these not quarters. So in my opinion, that's technically a green flag. The assets outweighing liabilities in the short term being outweighed in the longer term. If we switch over here, we can see that, even something like the gross profit, because again, revenue minus cost of goods sold yields gross profit, right? So when we dip down into the 50, 60 million range, right? Look at the gross profit, 20 million, sub 10 million, 3 million. When we bring in 100 or 100 plus, that's when the profit really jumps up, and you can see 45 million, back up to 26 million, 47 million, and now as of last quarter, 32.8 million. The operating expenses actually seem to be held in check, and you can see 11.7 million, technically the second lowest it has been over the last about 6 or 7 quarters. However, with the revenue jumping up to almost 200 million, the fact that the operating expenses really didn't move too much, in my opinion, could be viewed as a very green flag, but we'll see how it looks from quarter to quarter. We're going to have to keep an eye on it. If we switch over to the balance sheet here, we can see assets got above 800 mil, pulled back now to sub 700 million, but technically not the lowest it's been. Liabilities, though, did chunk down, as you see, was basically maintaining the high 7, low 700 million range. Now we're down here sub 600 million. Assets minus liabilities yields total equity. And we can see that the company was holding negative equity for quite some time, and just a couple of quarters ago turned it positive and basically doubled it the last quarter here, going back from Q1 to Q2. So total equity now about 76.6 million. So if we were to hypothetically do our quote-unquote fair value of the business, as you see, equity 76, debt 171, so debt minus equity, that would bring us to what, like minus 100 million? And if we come back over here, we have 257, so that would bring us to about plus 150 million. And if we look last year, we did 320, which would bring us to about 470 million, plus they were profitable. So I personally put the fair value of this business at about 550 million, and you can see the market cap 642 million. So a situation like this, like we always say, I personally like to follow the money, follow the revenue, and technically the business is growing. And again, we're talking about potential funding from the taxpayer here, DoE investment into low enriched uranium. So we could potentially get some funding down the road, which of course, even if they get whatever, 10% of that 2 billion, that would be 200 million, which would be roughly 30% of their current market cap. So you can see the potential for this stock to really start running. But I wanted to show you the triangle here, because yes, it has been like almost 3 years, and it seems like, even though these are technically big swings, as you see, 88 down to 17, bouncing up to 60, back down to half that of 30. So I understand that there could be big money made on trades of both shares and options here in this one, but over the longer term, you should never really be afraid of a symmetrical triangle like this, because I understand technically it's not bullish and it's not bearish, right? Because it can break either up or down when it's a symmetrical triangle. So obviously, even if the company posts some decent numbers and stays in this range, if it's announced here after the ball drops that the money is going to these LEU companies, but it's not going to Centrus, then it may actually break down and maybe form like a double bottom here over the longer term and then take some time and start to climb back up, right? So you may initially see a drop, even if it doesn't make sense in the numbers, just because of a quote unquote competitor potentially receiving funding when they didn't, right? But overall, I actually like the setup here. And again, I just laid out the numbers. In my opinion, I do think it's undervalued. And I just want to show you a quick comparison to another stock that was in a multi-year symmetrical triangle and is now consistently raging and hitting new highs. Now, I understand it's kind of a different industry. Of course, we're going from uranium to a defensive product here in tobacco. But I just want to show you Philip Morris. When I originally looked at this stock, we spoke about this symmetrical triangle. And I said, in my opinion, looking at the numbers, PM should probably break up out of the triangle as opposed to break down. And of course, this is the high, as you see. Look, February 22, and then we come all the way to this bottom, April 24, right? So this took a little over 2 years. It was bouncing around, and then boom, it decided to break up and start climbing to new highs. So looking at something like LEU, again, maybe because it's an energy stock and because there's still some turmoil happening overseas, but now with this administration, we're potentially looking at some funding coming in for domestic low enriched uranium. This is why I'm saying, in my opinion, especially looking in the numbers as well, I think this stock, LEU, has a very, very good chance to break up out of this symmetrical triangle. And it could potentially happen right here, like next quarter. This would be the first week of November, basically right around election time here in the States. And as we roll into elections, as we roll into earnings, if we could potentially see any news about funding from the DoE come in here going into these earnings, this will potentially force it to pop out of this symmetrical triangle. And then, of course, if these numbers are healthy, it may just continue to keep climbing. So you could potentially see $60 to $70 a share off of this stock on these levels just over the next about 3 to 6 months, I'd say, in my opinion, which, as you see, could be potentially 50+% returns here just over the next 3 to 6 months. But the earnings, again, are kind of hot and not, but more times than not, they are technically beating, as you see. We have 5 beats, 2 misses over the last 7 quarters, and we have 6 beats and 1 miss over the last 7 quarters on the EPS side. And you can see we have, weaker, I guess we could say, weaker Q3, and then you have a big pop in Q4, and then we, quiet down in Q1, and then we have a big pop in Q2. So, we have like these semi-annual breakouts, but longer term, you can see we're expecting for 24 to get up to close to 400 million in revenue, which of course would prove in the numbers even more, in my opinion, that the stock is undervalued. And then you can see, even looking out to 25 and 26, we're expecting to hold and maintain that high 300 million, potentially 400 million mark over the next year or two as well. So this is why, again, in my opinion, right now, if this company gets to 390 million, let's say, and holds that level for the next year or two, I would still stick to my analysis and say, in my opinion, I think it would still be undervalued. And you can see on the annual side, the company has been growing nicely, well above estimates now 4 years in a row. On the EPS side, big miss coming out of the gate, but of course that was lockdowns. A lot of companies reported some choppy EPS numbers, and you can see they came out strong in 21 and have stayed above estimates here for 22 and 23. So a company like this, I would give them the benefit of the doubt. We do know that any news that comes out could definitely really spike it up or drop it down hard, but if this funding from the DOE is coming, I would personally probably give this company the benefit of the doubt. And even analysts over at Roth, you can see price targets cut from 62 to 55, but that's still significantly higher than where the stock is currently trading here of sub 40. So, even the more conservative analysts still have some pretty decent price targets on this stock. And you can see Centrus board added 2 members recently, key national security, industry, nuclear expertise. Okay, we top estimates. Was this the article that spoke about... No, may have been a different article. Bear with me, bear with me. We're reading cash balance, couple hundred mil. And you can see, look at that net income up huge, more than a double. On revenue up, more than a double. Here we go. Secured a U.S. Department of Energy waiver under the Prohibiting Russian Imports Act to cover 24 and 25 U.S. customer deliveries under the Russian supply contract. Long-term goal, restoring domestic uranium enrichment capability at scale. Meanwhile, the U.S. Department of Energy issued a series of request proposals to jumpstart domestic nuclear fuel production, backed by more than $3.4 billion in appropriations from Congress, largest federal investment in uranium enrichment in decades. We are vigorously competing for this funding as we believe it represents a historic opportunity to restore America's nuclear fuel supply chain with U.S. technology built by American workers. So, in my opinion, if we do want to slowly start to phase the Russian supply out of the picture, then we could potentially see this push through with the Biden administration just over the next couple of months, before or right after elections potentially. If we also want to bring the domestic supply of enriched uranium back here in the States, and we want it to be made and maintained and built by American workers, then with a successor coming in like Trump, who is, America first, this can also potentially lean in their favor as well. So just the general vibe, almost reminding of what we saw with LAC, if you recall, Lithium Americas, LAC. Same thing, right? We had, 2.4 whatever billion came in from the DoE to now invest into a domestic lithium supply. Now you can see 3.4 billion in appropriations for domestic enriched uranium supply, right? So you can see the writing on the wall. So that's why when it comes to this funding from the taxpayer, in my opinion, I would give the company the benefit of the doubt over the next, like I said, 3, 6, 9 months, whenever the news may hit. In general, the fact that it's a domestic company, enriched uranium, and like I said, even with Trump coming in, and more importantly, looking at the actual numbers of the business itself, I personally would consider being a buyer of LEU, especially since if we are going to stay in the symmetrical triangle, again, you're going to have to keep an eye on this bottom trend line, because if we break, we can drop back down to 33. So in the short term, you definitely could take a 15-20% haircut, no doubt about it. But if we do stay inside of this symmetrical triangle, you can see you're basically buying about a point and a half off of the bottom of this range. And that's why, even if we just kind of mostly reclaim this gap, you can see 44, 45 and a quarter, maybe back to this fib level. So in my opinion, I would I would be a buyer here. I would be a buyer. But that's just me. That's just my opinion. But you can see technically the stock is making lower lows and lower highs. But again, we're kind of staying in this symmetrical triangle range, so that's kind of to be expected. But the MACD recently crossed to the upside, looked like it wanted to try to retest and cross down, but then the stock bounced and kind of started to slowly climb up. And you can see also this support level, 38.58. You can see multiple bounces above this support level. So that's why, in my opinion, I think next stop may be about 41.5 right here around this 50-day moving average, and then potentially back to the pivot point of about 44. But even that fib level, again, 45.27, that's a one-year fib level. You can see the 200-day 45.45. So we may just kind of slowly climb back up into the 40s here from this level. RSI basically middle of the road, right? It's sub 50. So in the short term, we have more room to go. And on the weekly, you can see RSI 44.7. So we definitely have more room to go. If the stock closed at the top here of the week, we could potentially make the argument for a bull hammer, but it is only Tuesday. And also this next pivot point is 46.88. Again, top of that range would be about 49, looks like. Maybe about 49.5. So we can easily retest these pivot points and these moving averages, no problem, without even getting to the top end of that range. That's why I say I do think it might hold steady here. And you can see the retest and the bounces here, the flash crash through the 200-day, and then the immediate reclaim, and then you can see double bounce there the following weeks after. So this is why, again, right now in the moment, it does seem bullish to me. And I would keep an eye on this 200-day moving average on the weekly 37.21 would be a level I would personally watch. And of course, if we immediately start dropping down, you can see it's about the high 37s, like we said, about 37.80, 37.90 for the bottom trend line. So it may, again, it may drop as you see. It may slightly drop below this trend line, 37.16 fib, 37.21 moving average, right? So that's what I mean. We may see a flash crash here to the fib, to the moving average. That might scare some people out, but then it might just be retesting and ready to bounce back into the 40s, right? So this is why we know anything can happen. But again, in my opinion, looking at the numbers, looking at this tightening, I like it. I like it. Check the forecast out of curiosity. Oh my goodness. So we have 3 analysts looking at the stock. All 3 have strong buys. And you can see average price target right now is 67. Lowest price target was 55. We just looked at, right? They lowered the price target, but it's still, what, 35, 40% higher than where the stock's currently trading. And of course, our highest, price target, $76 a share. And like I said, more consistent than not, even though it's very hot and very not. And yeah, technically, this stock should do something similar to a PM. Again, staying tight in the triangle and then starting to break up and break out. So LEU, low enriched uranium, Centrus Energy Corporation. In my opinion, I like it. I'm a buyer. And again, I think that a lot of news and events taking place overseas, mixed with our move and our recent investments into domestic metals and minerals and materials, I do like this one. And shout out to Velser, however you say it. He knows who he is, but shout out to him. He asked us, hey, you want to take a look at LEU? And again, in my opinion, I like it. So right now in the moment seems to be a good call by them. And we'll see how it turns out over the next couple of months. And if anyone is in, obviously let us know down in the comments section. If you were watching it and thinking about getting in and you kind of agree with what I'm saying or disagree, let us know down in the comments section. I'm curious how you all feel about this one, but that's pretty much it. I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.